Hey everyone, it's Zach Beck. The Federal Reserve just implemented a major policy change as it relates to inflation. Specifically, Jerome Powell said that he's going to allow inflation to run hotter than normal in order to support the labor market as well as the broader economy as a whole. So what I want to do in this video is talk specifically about what these changes are, how they will impact you, and how we can position ourselves right now to make the most of this change. So let's jump into it right now. This change by Federal Reserve Chairman Jerome Powell is a robust update of the federal policy as it relates to how the central bank will agree to average inflation rates moving forward. Specifically, what he's going to do is targeting inflation rate to allow it to run above 2%, and that is a substantial change from past policy. This change was put together in a policy blueprint called the Statement on Longer Run Goals and Monetary Policy Strategy. Obviously, that sounds a bit boring right now, but the impacts are substantial when it comes to the economy. And what it means is that they're going to allow the inflation to run a little bit hotter, say above 2%, while allowing interest rates to remain low. And that is where this becomes very specific to you and I as it relates to how we could potentially borrow and spend money, and also how our money is potentially going to grow in our high interest savings accounts. So this has broad impact throughout the economy, and we need to decide what we should do now in order to make the most of the situation. As interest rates remain low, it will no longer be tied to the unemployment rate. Generally speaking, as unemployment rate declines, the interest rates tend to creep up a little bit. But what the Federal Reserve is planning to do now is that even if unemployment rates do decline, they're not going to simultaneously increase interest rates, hopefully trying to stimulate the economy by encouraging people to borrow and spend more. This policy move might seem contradictory to an extent, and even Jerome Powell agrees. He said the following. He said, "Many find it counterintuitive that the Federal Reserve would want to push up inflation rates." But what he's saying is that inflation that is persistently too low can also pose a serious risk to the economy. Jerome Powell also said that he was contrasting this with what happened 40 years ago when the previous Federal Reserve Chairman, Paul Volcker, actually tried to have the inflation remain low, so he actually increased interest rates, and that was a different approach that he took. And personally, what you're hearing from Jerome Powell is that he did not agree necessarily with that strategy. So you're seeing a different tact right now, and obviously it's very difficult to compare the economy 40 years ago to the economy right now with the advancements in technology, how many people are engaged in the stock market, what's transpiring as far as this pandemic is concerned. There's so many variables that are different from then. So what we're going to find is he's trying to try and take a new track right now, which might end up actually helping the economy as a whole by stimulating spending and encouraging growth. One thing to bear in mind is that the 2% target rate for the Federal Reserve has been in place for quite some time. And as a matter of fact, since the 2008 financial crisis, the Federal Reserve has had a very difficult time ever reaching that 2% inflation threshold. So by allowing the inflation rate to run hotter than that, say 2.25%, 2.5%, maybe even 3%, it's really a matter of if we even ever get to that point. But the overall strategy and implementation of this is actually going to mean for you and I that there are going to be lower interest rates for a longer period of time. So as it pertains to what that will mean for you or myself, that means you might have more options when it comes to being able to refinance a loan or being able to purchase a car or finance things along those lines. Now, as I'm saying that, I want to really say something that's super important that I believe all of us should understand when it comes to borrowing money. Borrowing money is a very difficult approach for us to take if we're wanting to maintain financial health in our lives. There's actually a saying that says the borrower is slave to the lender. So my encouragement is that if you're looking at this as an opportunity to actually take on a debt, so by borrowing money, make sure you're very wise in doing so. If you're considering, say, a mortgage, that would be maybe one area that you could consider this as an opportunity. I actually recently did a video about how low interest rates are for mortgages. Feel free to check that out and get my thoughts on that. But if you're thinking about financing a car, purchasing appliances, or financing other things, yes, you might be able to get a low interest rate. But once again, just because you can borrow money cheaply doesn't necessarily mean it's the best thing for your financial health. What I personally like to do is to do everything I can to not have debt in my life, not allow lifestyle inflation to creep up, and do everything I can to invest my money and save my money so that way it's allowing me to have a better financial future. So my encouragement is that if you take those approaches, even in this kind of tempting environment where you might want to actually take out a loan, I think that might be a better tack right now and a better strategy to employ. The other thing you'll want to consider though, now moving away from borrowing money, but how you're investing and saving your money, you're going to notice now if the overall interest rates are going to remain low, that means that if you're just putting your money in your checking account or your savings account, and specifically just in your savings account, you might not be getting a high interest or a high yield on an annual basis. So your money actually would do better if it were to be invested, say, into the stock market, into a group of index funds. Now, from that perspective, you'll find that you have more options out there than you could possibly imagine. Different groups I like to use are Vanguard, Wealthfront, WeBull, Robinhood, all sorts of different organizations that exist out there for you to try. Specifically, I like investing in what are called index funds. You'll hear me speak about those repeatedly on this channel, but the intention behind that is that right now it would be very difficult to have to find a high interest savings account that's going to yield anything beyond 1 or 1.5%, and it looks like that might be the case for the foreseeable future. So instead of just taking your money right there, obviously you want to have money in your savings account. A certain percentage of your money should be going there. But if you're thinking of investing, this might be a better time to do so because you will actually receive a better yield more than likely if you invest as opposed to just putting money into a savings account. Now, with risk comes reward. There is a bit of risk if you invest your money because you're not guaranteed to have a return, but the probability that you would have a better return than putting your money just into a high interest savings account, especially over these next few years where the Federal Reserve is going to keep interest rates low, that's something you really want to consider. With all that being said, I'd like to thank you for watching the video today. If you wouldn't mind, please like the video. That would actually really help the channel out for the YouTube algorithm, help push this video to other people who might need to hear a message like this. In addition, if you have any questions, please comment down below. I'd love to interact with you, get to know you, and do any research on your behalf to help you make well-informed decisions in your financial future. And lastly, if you wouldn't mind, please subscribe to the channel. That would actually mean a lot to myself personally as I put a lot of time and energy and effort into this channel, and I want to do everything I can to create positive content that makes a positive impact in your life while encouraging yourself and myself to lead lives of meaning and purpose, all while maintaining balance and moderation. And if you do subscribe to the channel, please tap the notification bell. That will notify you every single time I post a video, which I do on a weekly basis. Once again, I'd like to thank you for watching the video today. I look forward to hearing from you next time. Talk to you later.